Over the past few weeks, we've seen that the crypto contagion has spread far beyond Celsius network. And I promise I am still planning on addressing the Celsius situation in full as soon as the dust settles. But in the meantime, there's a domino effect spreading throughout the CeFi space, with many other big names taking some serious damage. For example, Coinbase decided to lay off 18% of employees to, quote, stay healthy. There have also been leaks that they cut pay for their affiliates by over 90% due to market conditions. In the lending space, many other companies have been dealing with repercussions stemming from their connection to Three Arrows Capital. According to Danny Yuan at 8 Blocks Capital, they were leveraged long everywhere, which triggered a flurry of margin calls across their positions. But the real trouble is they may have borrowed this money from lending platforms without the proper collateral. It's believed that BlockFi is one of these platforms, and CEO Zach Prince presumably addressed it in a tweet saying that they were one of the first to liquidate them. It's also interesting to note that they say it was indeed an over-collateralized loan. According to analyst Dylan LeClaire, Three Arrows Capital also borrowed $650 million from Voyager, but this was completely unsecured, which could mean a total loss for Voyager. Shortly after this, BlockFi announced that they secured a $250 million line of credit from FTX, with Voyager following suit with a nearly $500 million line of credit from Alameda, a trading firm also managed by FTX CEO Sam Bankman-Fried. In short, one of crypto's biggest hedge funds was massively over-leveraged through leading lending platforms, and they're all paying the price. Of course, this is also exacerbating the market downtrend, spreading further pain in the markets. Mysteriously, FTX is there to save the day for all of these platforms, which has led to even more speculation that Celsius's liquidity issues is actually a result of a coordinated attack more than their own mismanagement of funds. Now, I don't want to focus on this speculation just yet because there's still a lot we don't know. And clearly, Celsius did make some serious mistakes, irrespective of other industry participants. What I want to focus on in this video is Nexo, because they seem to be flying under the radar during this awful news cycle, and might actually be doing quite well. Nexo, of course, is another big crypto lending platform that offers yield, loans, credit cards, and exchange features. I've reviewed them in a previous video if you want to dive into their product offerings. But the first thing that caught my eye with Nexo recently was their letter of intent to acquire Celsius. Immediately after Celsius froze withdrawals from the platform, Nexo openly published this letter with an offer to acquire all of Celsius's assets. This letter has since expired with no clear indication of a response from Celsius. At first, this seemed like a shady publicity move, considering some Twitter users found it promoted on their feeds, meaning that Nexo paid for people to see it. However, this desired acquisition has some more fuel to it after finding a few more connections between the two platforms. For instance, Nexo announced they'll be working with Citibank to lead consolidation efforts in this environment. Their opinion is that solvent companies like Nexo will begin to acquire insolvent companies to alleviate some of the pain and help the industry move forward. And they cite their letter of intent to Celsius as a key example of this. And this follows the news that Celsius is also working with Citi to navigate their options during their liquidity crisis. This includes, notably, getting advice on offers such as Nexo's bid to acquire Celsius's assets. Regardless of whether anything comes of this, it got me to take another look at Nexo and see what they've been up to, and maybe that was their plan all along. But they recently did an AMA on YouTube where the co-founders addressed the community, and there were some interesting takeaways from the conversation. Now, I'll be the first to say it's a little hard to believe that Nexo could be performing so strongly when nearly every other crypto company seems to be struggling. But they claim one of the reasons for this is their strict adherence to over-collateralization with loans. This means that every dollar that is lent out must be backed by at least $1 of collateral. The opposite would be under-collateralized or even uncollateralized loans, which is what allegedly happened to Voyager and their loan to Three Arrows Capital. In fact, Nexo even revealed that the firm approached them for an unsecured loan years ago, which Nexo declined due to their collateralization requirements. But of course, they were able to find those funds elsewhere, as we saw. As a result, Nexo had zero exposure to Three Arrows Capital, which is bringing down many crypto lenders lately. And furthermore, they had no exposure to Luna or, quote, high-risk DeFi strategies, which were presumably the source of Celsius's liquidity issues. If there's any doubt, they claim to be the first and only company that provides real-time audits of their assets. Thanks to their partner Armanino, you can access a real-time report of their collateralization levels. Unfortunately, all we get here is whether they are or aren't at least 100% collateralized, which they are at the time of this video, and this audit appears to run every day. You can also download a report for more details, although this doesn't show quite as much detail as I would like. Ideally, it would show the exact addresses, funds, and liabilities that Nexo has, and we get no such information. But we do get the process for calculating these collateralization levels, which is still helpful. First, it calculates customer liabilities. These are all of the user funds that Nexo controls, the assets that people like you and me transfer onto the platform. And these are simply the cryptocurrency and fiat currency balances that users have deposited. Armanino then converts these balances to USD for further calculations. At the end of this, it's essential that Nexo has at least this much or more in assets so that they can repay all of their users if they really needed to. But next, we get a look at where Nexo holds all of its assets. Armanino pulls from these sources to calculate how much Nexo has at any given time. First is self-custody, which is pretty self-explanatory. It also includes third-party custody as well as institutional loan balances. It also includes any fiat Nexo holds on exchanges and the loan balances currently owed from retail customers. Finally, we have digital assets and DeFi sources, which includes those deposited and borrowed against. So while Nexo claimed earlier that they don't use any high-risk DeFi strategies, it's important to understand that they could still very much be using leveraged DeFi strategies to earn yield for users. Another important note is that while they consider all of these to be assets, they may not be fully liquid, particularly outstanding loans and funds in DeFi. So while I want to believe Nexo here, if we've learned anything lately, it's that you need to be very careful with who you entrust your crypto to. Regardless of how safe these DeFi strategies may be, things can and will happen. Anyways, after calculating the customer liabilities and Nexo's assets, they determine whether the assets exceed those liabilities and provide a greater than 100% collateralization rate. And sadly, we don't get an exact percentage, just whether it does or doesn't. So the real-time audit is nice, but I would still like to see a little more transparency. With most crypto platforms making headlines for the wrong reasons, I was curious how strong Nexo is in this environment as they're pushing this acquisition narrative. And I will say I really appreciated in their AMA that they had a sympathetic stance towards Celsius users and everyone else in the space. There's been a lot of gloating and people saying, "I told you so" about Celsius and other recent events, and it's a really toxic stance to take when we all want crypto to succeed. If there really are companies attacking each other, it's going to set the whole ecosystem back, and Nexo seems like they're on the right side of the narrative here.
Whether it's with advice, whether it's with the provision of liquidity, whether it's on the basis of the acquisition of certain parts of the business or the entire business. As a matter of fact, Anthony, we're currently looking at about 7 or 8 companies in the space where I believe we can be instrumental with turning things around and optimizing the pursuit of shareholder returns.
So if Nexo is actively looking at 7 to 8 companies to get involved with and already sent Celsius liquidity and acquisition offers, I have to assume they're doing well enough to back some of this up. Also, I have an active affiliate relationship with Nexo, and just last week they added a new bonus to the affiliate membership, which is giving affiliates a percentage of exchange volume traded by each user. So while companies like Coinbase are cutting affiliate fees, Nexo is adding to theirs, which seems like a total power move in this environment. To be fully transparent, I previously compared Nexo and Celsius as interest-earning platforms and decided I liked Celsius more, which is a decision that isn't looking so good lately. It still feels too early to make any big decisions here, but I'm actively reassessing the risks of all of these CeFi platforms that I previously trusted without concern. Nexo is a platform that I've always liked, but felt just a little short of Celsius based on my analysis. While I don't see myself ever going all in on one of these platforms again, so far, Nexo seems to be doing the right things while red flags are appearing with many other platforms. And if their promotional materials are to be believed, they might become one of the bigger players in the space when it's all said and done. And I gotta show the affiliate link too. Nexo has a $100 welcome bonus paid in Bitcoin for users who sign up and transfer $1,000 to the platform. Personally, I'm moving all of my liquid Bitcoin to cold storage after the craziness we've seen recently. But those who gotta have yield might want to check out Nexo. And for more about Nexo, you can see my comparison to Celsius Network here for an overview of all of their products. Just keep in mind some of the rates have changed, and of course, Celsius is not a fun place to hold your funds right now, although I still am confident at this point that they will recover. Thanks for watching, hold strong, and I'll see you guys next time.